Let's get in touch with Ajay Vohra, Head of Equities at Nuvama Asset Management. And Ajay, thanks so much for taking the time out and joining us on the show. First up, give us a sense of what you are making of the union budget, some initial quick thoughts on the Capex side.
Good afternoon and thanks for having me on the show. I think that it was definitely a very good budget. And to start with, I would say the fact that there was no negative element to the whole budget itself is a big positive, right? And also, if you look at the current scenario, the fine act of, I think the balancing between all three things, the fiscal prudence, the focus on consumption, and continuity of capex, I would say a commendable job has been done on all three fronts. I think, most importantly, where global investors look at India is definitely, a constant, I would say, discipline in terms of fiscal prudence, which is definitely addressed. We are now down to almost 4.4, and there has been a roadmap till FY31 to reduce the government debt to GDP from almost 57% to 50%. So I think that clearly is definitely a green flag for us. Secondly, I think if you look at how the private capex and the government capex has been shaping up over the last 4 5 years, it was government who was doing all the heavy lifting, and private capex was not picking up mainly because on the consumption side the demand was pretty muted. But I think with the consumption boost through this tax breaks, the private capex will also start to come up in a couple of years, and I think which is definitely a big positive. And then if you look at the government capex, I don't think there is a major disappointment as such, because one needs to understand that the base was getting much larger, and on that a higher base, it is very difficult to continue to spend at 20 30%. But I think that at the headline level it is 10%, and if you add the transfer to states and couple of other schemes, it is coming to somewhere around 15 16%. So my sense is that consumption boost will drive private capex, and the government capex is in order, and fiscal prudence is also very much well maintained. So I think it
Yeah.
was definitely a very good budget.
Well, definitely thumbs up to the budget. Hi, Ajay. This is Shrishti also joining in. But Ajay, help us understand that what changes are you making or recommending your clients at this point in time? While there's been no major disappointment from the Capex side, but all these stocks are reacting given the hopes were a bit high. Any changes in terms of the getting more overweight on the consumption side, and within that, how are you positioning yourself, and what are you cutting down in your portfolio right now?
Yeah, so fortunately for us, because the whole, I would say the capital goods and the capex theme was trading at much expensive, I would say, valuations. We were a little bit ahead in terms of going underweight on this whole theme, and gradually we had started building in terms of the financials and the consumption. So even now, I would say that the whole the benefit which the overall consumption will get from this 1 lakh crore, we believe that quite a few discretionary sectors, the consumer discretionary sectors will benefit. We also believe that on the financing side also, the consumer financing companies will also end up benefiting. So in a nutshell, I would say that the changes what we are making is incremental money flow. We are deploying on these consumption related themes where consumer durables, then the entire hospitality sector like the aviations and the hotel, I would say the entire value retail segment. And as I said, the consumer financing side of the business will also pick up going forward. So I think that the tilt is definitely more on the consumption side across these 3 4 sub themes.
Right, but also help us understand that while consumption was a very clear outperformer and winner in the budget, what are you making of the defense space? Because that has also seen a hike in its budgetary allocation. Any stocks, any themes from the defense space that you would like?
So all these, sectors are definitely a very, I would say, long themes, and they'll just keep getting better as the economy, keeps growing, because we have reached to a particular percentage as a percentage of GDP, and if the GDP continues to grow at 10%, the allocation towards these sectors will also continue to grow at a similar 10 12%, which itself is a very big number. So my sense is that although people feel that the allocation has been a bit lower, but my sense is that these defense is a very large theme, and it can continue to give decent returns over a longer period of time. So within that, we are playing a couple of names which are more focused on, I would say, indigenization, and also a couple of names which are more focused on exports. So overall, I believe that the sector is definitely on track to deliver decent numbers.
All right, Ajay, with this, we'll let you go on that. Thank you so much for taking the time out and helping us and our viewers understand that at this point in time, how you should position yourself. Given so many announcements regarding the budget, there's been a big booster to the consumption theme. But yes, indeed, there are concerns with the tariff wars and the tariff concerns, and definitely market are reacting to that, because in the global markets as well, what we are seeing is that there has been a sharp sell-off in some of these Asian markets that are open today. And other than that, the Dow futures and the other US indices are reeling a bit under pressure.